Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Wednesday, August 27th. In today's episode, I'll tell you about the latest drama coming from the White House that's impacting the markets. Then, Eli Lilly's big announcement regarding their weight loss pills. The markets stumbled out of the gate nearly unchanged today. I guess the rate cut enthusiasm died down. More than 400 stocks in the S&P were down to start the week, and we're getting news today that's likely going to shake up the markets even more. President Trump just threatened China with tariffs again because of China's export controls on rare earth magnets. He told reporters that if they don't give us magnets, then we might have to charge them 200% tariffs or something. That's a direct quote. Now, the reason this matters is because China controls 90% of the global supply of rare earth magnets, which are critical for building everything from cars to phones. So we'll see if China ends up relaxing export controls on those magnets. But to add to the tariff drama, Trump is going after countries with digital service taxes, which are aimed at big tech US companies like Meta, Google, and Amazon. Trump said that unless those tariffs come off, he'll slap substantial new tariffs on those countries and even restrict US chip sales to those countries. So we'll have to see if Trump is serious with those threats or if it's just a bluff. Now, Trump is serious about remaking the Federal Reserve. Last night, President Trump said that he is firing Federal Reserve Board Governor Lisa Cook from her position, citing allegations that she had made false statements on applications for home mortgages. Now, just to be clear here, Lisa Cook has not been charged with any crime. Lisa Cook pushed back, saying that she won't resign, and she argued that Trump doesn't even have the legal authority to fire her. So this is likely going to get messy. It's probably going to be challenged in court, but the bigger picture here is that President Trump continues to attack the independence of the Federal Reserve over their refusal to cut interest rates. You know, the Fed being an independent entity is a crucial element of the economic system, so we'll see how the markets end up reacting to all of this. Let's run through some headlines. Trump's plan to turn the US government into an investor might just be getting started. A few days ago, after the US government took a 10% stake in Intel for $9 billion, the president said Monday he wants to make many more deals like this. And this morning, Commerce Secretary Howard Lutnick just told CNBC the Pentagon is thinking about taking equity stakes in defense contractors like Lockheed Martin. Lutnick called Lockheed Martin basically an arm of the US government, which, okay, I understand his point since more than 70% of Lockheed's revenue does come from the US federal contracts. But I mean, owning a piece of the company, that would be a whole new level. To be clear, the US government has taken stakes in private companies before, but it's always in a time of crisis. It happened back in 2008 with all the failing banks. It also happened in 2009 with GM and Chrysler. But right now, there is no crisis. Defense contractors are doing just fine. So this feels more like President Trump pushing the US towards a kind of state-sponsored capitalism. Critics say that this is risky for companies like Intel or Lockheed to have the US government be a shareholder because they might start making business decisions based on political pressure instead of market realities. But then supporters of this move argue that taxpayers should be getting something back if the US government is handing out billions of dollars in subsidies anyways. Either way, it completely rewrites the rules of capitalism in America, and it'll be interesting to see how the markets react to it. If you're an investor, do you want to own a company that the US government is a major shareholder in? Well, we're going to find out. Let's shift gears and talk about Eli Lilly, because the pharma giant is now one step closer to getting their weight loss pill to market. The company announced that their daily weight loss pill crushed it in latest clinical trials, helping patients drop an average of 23 pounds over 72 weeks. You know, these weight loss pills could be a game changer because right now, the GLP-1 market is dominated by weekly injections like Ozempic and Mounjaro. These pills would be a lot easier to take for patients and, more importantly, a lot easier to manufacture. So they would be cheaper than weekly injections that could open up a wide market of people that are willing to now take these pills. Eli Lilly says that they have enough data to file for approval, and they expect a global launch around this time next year. So summer of 2026 could end up being a big one. This is great timing for Eli Lilly because their rival, Novo Nordisk, recently received approval for their weight loss pill, and Eli seems to be on the verge of getting approval too. By the way, the other pharma giants like Pfizer and Viking Therapeutics have been trying to get their own weight loss pill to market, but they've struggled in their clinical trials. So this could leave Lilly and Novo Nordisk to continue to dominate the weight loss space moving forward. So I'm definitely keeping an eye on these two companies and their stock as these pills come to market over the next few months. That's all the business headlines I have for you. Let's take a look at some stocks making moves. EchoStar shares are going parabolic after AT&T said that it's buying spectrum licenses from the company for $23 billion. To put that into perspective, EchoStar's entire market cap before this news was only $8 billion. So this is a big deal for EchoStar, and it's a good deal for AT&T as well, because these spectrum licenses give AT&T access to the invisible highway that carries wireless data, and AT&T desperately needs them to boost their network speeds. EchoStar investors are really happy about this deal, and their shares are up more than 70% this morning on this news. On the flip side, shares of MicroStrategy are down this morning after Michael Saylor went on a shopping spree for more Bitcoin again. The company announced that it bought more than 3,000 Bitcoin for about $360 million, bringing their total stash to 632,000 Bitcoin worth almost $71 billion. But investors are surprisingly not happy with this move because Bitcoin price has slid 2% in the last 5 days and it's down 6% in the past month. As a result, shares of MicroStrategy fell by more than 4% and it's down another 1% now. That's all for today's show. Keep navigating those waters and see you tomorrow.